All right, well, good morning, active traders. I'm Ken Calhoun. Wanted to welcome you back to this episode of Trading Week Ahead. Doing these for over a decade now. The number one, to my knowledge, or at least in one of the top most popular webinar series in the history of the whole trading industry. 6,000, you can see proof. Over 6,400 people registered for these events. So thank you for being here. Good to see a big popular number here. Hey, before we get started with today's broadcast, I just wanted to remind you, we'll be doing these kind of closing bell format events called Action Close from 3:30 to 4 East Coast time, Tuesday, Wednesday, Thursday. So next week, Tuesday, Wednesday, Thursday, I wanted to invite each of you to attend as my guest. And the purpose for doing these is to show you examples of the alerts that our members got earlier in the day, and also to look for anything that might be worth trading during the last half hour. Oftentimes, things are running up, they may spike up into the last half hour, or if they've been selling down, often you get a short squeeze. You get a run up during the last 30 minutes. So we'll look at live charts, and I'll be doing live trading as well. And so hopefully I'll see you there. You can register for those at www.actionclose.com, or you can, that'll forward you over here to trademastery.com/actionclose. So it's something new. So it'll be the same format as the 30-minute time frame that we've got in these events, but during live markets. We've got something exciting that's scrolling by, and we can look at what charts are going up and which ones are going down and where the difference is. Anyway, let's get started. With our S&P and congestion the last couple of weeks, it's a mixed bag. We don't have too much directional volatility or signals one way or the other. We had a bearish and almost bearish engulfing up here and a hammer down here, but overall we're in a pullback off that 42.40 or so resistance. And so I'm not going to be putting on many swing trades unless we get north of 42.50. And that's true for the next couple of weeks. We may well see some drift and some chop. We've got earnings coming up next week, but nothing extremely significant. So with a lack of market moving intel out there, our approach should be one of being conservative and focusing on the strongest of the charts that are telling us they're worth trading. Another key indicator to keep a keen eye on visually is the VIX. And we're always going to keep an eye on the VIX relative to 20. Right now it's at just slightly above 20. So the higher the VIX is, the more bearish the market is, the fear indicator. So VIX is hovering near 20, also not yielding much in the way of signal strength. So what our goal therefore becomes to find relative strength plays. If the market's chopping around, we want to find charts that are beating the market like this one, with a good directional run, and see where they go. This is STLD, really nice breakout to the upside, and we'll see if it breaks over 67, 68, but keep these on the radar. STLD is a good one. These are a couple that you folks had mentioned, so thank you. A couple of weeks ago, STLD, one of my live room members had mentioned STLD. One of you folks had mentioned NUE. That's another good one. These are a little pricey, up near 100 a share, but the directional strength is really good. See, why would anybody consider trading something like Apple? Why on earth would you have traded Apple this year, right? It's a name brand, and I like the company. Well, that's great. Own the products, but don't buy the stock. That's a really horrible chart. It's telling you you've got a lack of buying pressure, and so you can own it, not trade it if you want, but you want things that are actually going up and can actually make you money. So Apple's probably outstanding as a long-term investment play, but from an active trading standpoint, it's a horrible chart. You want to find charts instead that are in motion, like this week's movers, like that, right? So it goes back to the idea of, I love Apple. It's a great company, and the products are outstanding, really good quality if you've got any of their products. And they're in the news all the time. But why? It's a non-story. If the price is flat, leave it. It's a non-story. So anyway, we want charts that actually have better directional strength to the upside. So here's 3 top charts. A couple of these are carryovers, NUE and ALL. Why one of you folks had wisely mentioned this about a month ago, so thank you. It ran from 46 up to 54 here. And now that it broke the 50, remember we've been following this thing for weeks and weeks. Now that it's over the 50, it's in the next phase of a breakout. So We don't want to play it until it takes out new price action highs north of 56, but ALLY also on the radar. Now, a new one that one of the talking heads on financial TV mentioned yesterday was Ford Motor Company, and I like that actually. I like Ford. I used to work for Ford. Great company. I've been telling you guys it'd be along anywhere over 10. Or I've been telling my live room members that for a swing trade it'd be a play over 10 earlier this year, back at the new year. Remember, in his first or second week in January, I said Ford over 10. Now it doesn't have much range to it, so it's not too exciting. But yesterday's price action was pretty good for it. This is what I call an acceleration ramp, and that's where you got kind of a steady uptrend that hockey sticks into a sharp angle breakout. So Ford Motor Company, I'm going to buy Ford myself once it breaks 14. So I may buy 13.7, but that's a really strong price. It'll probably gap on Monday, so I'll probably wait for it to get over the nearest whole number over 14. But Ford Motor Company, that's a really good chart. That'd actually even be halfway decent for a day trade. But our day trade pick of the week was yesterday's long call that my live room members got in this one, ANVS, where I said to go long just under 40. I think my long trigger for live room members was 38.70, something like that. Anyway, I didn't think it would go up past 60. Were any of you guys trading this one yesterday as well? ANVS, I thought 60 was it because it had been 30. And anytime something doubles in an hour, that's big, right? So going from 30 to 60 was big. Then it went up without me from 60 to just under 100. So kudos if you had the courage to trade up here. I like the open range breakouts here. And this is an example of the types of charts that my live room members get covered and showing how to trade them. So that was our winner of the week yesterday. So anyway, back to our swing trading charts. I always start off with the S&P, the VIX, broad, big picture market internals or other things of interest, and then swing trades, and then we drill down into day trading charts in just a couple of minutes here. Wow, a lot of comments. Thanks, everyone. Well, thanks, David. Appreciate it. Hey, Wendy. Work all the time. A good point, David. Let's see, action close sites. Let me know if anyone has any trouble getting to the site. Can you guys go to trademastery.com/action close? And let me know if it pulls up okay for you. It should. I don't see any problems on my end. Trader's saying it's having some technical issue, but if you could go to trademastery.com/action close. And there's the link. Here, let me post it in chat for you guys. Okay, just put that GoToWebinar link in the chat box in your GoToWebinar interface. So look at the GoToWebinar interface, and next to the word chat, there's a little icon, a little arrow. Click on that. That'll open up the chat window, and there'll be the GoToWebinar link for this GoToWebinar link. So you can take a look at it there. Anyway, so Ford Motor Company, if it breaks 14, may be good for longer term. This multi-month type slow swing trade, slow grind up. We're probably going to see faster price action out of some of the cannabis stocks if they ever light up again. Tilray's been holding steady here near 15 the last couple of weeks. I'm in Tilray a little bit, but I'm going to start scaling up if it breaks over 16 and 17. So I'm going to break into the whole numbers, Tilray over 16, over 17, and then again over 20 if it pops. So Tilray and the other cannabis stocks are all of interest, at least ones I trade. Another recent runner, a lot of the miners, both the regular miners and the junior miners, precious metals related instruments like Hecla, this one, HL, is a good chart. You can see it's broken out to the upside just under 9 from a congestion base. So it's an okay chart. But I'll tell you, I prefer charts that go a little something like this. So if you want to get consistent in your trading, you want consistent breakouts where week after week after week it plugs away at new highs versus pullbacks or choppiness. We want charts that are showing demonstrated strength. So Apple's a good example of not that chart, right? This is an example of a chart that's would be really, you'd be hard pressed to defend this chart. It'd be more a short under 116 would be, that's what pops out to me on this. It's got a slight descending triangle support there at the 116. Short it down here would be the play for Apple. It may drift up, but not much. So I'm not a big fan of Apple. The other bounce play I've got for you this week, in addition to Tilray, is the Virgin Galactic SPCE chart. You can see it recovered 20, and that's a significant gap from the 16-18 base to just under 2022. So I'm going to buy SPCE if it gets over 22, right? That's the key resistance area price action wise in this chart. It had been way up at $60 a share back in February. Now it got decimated down to 16, and now it's starting to show signs of life. Kind of like taking your pulse, you know, 2 fingers. You want to steady heartbeat, and then the pulse races. Price action goes up, and it makes for a good trade setup. So that's a good potential reversal as well. Yeah, look at some other cannabises as well. Well, thanks, Bill, saying action close came up fine. That's good to know. And Gary's asking how to find the stocks to follow. Well, I cover those in the live room every day. So that's how to find them, is follow me in the live room. And you can, my Trading Open live room, we meet 5 days a week. Thousands of people have been members over the last 20 years, and that's how to find what's worth trading. Because again, it's not enough to just look at the leaderboards of the percent gainers or the high volume movers, because there's a lot more to trading than just looking at what's moving in one day. You got to see whether or not it's actually worth trading, and if the setup is there in terms of a chart pattern that makes sense for an entry. Here's a good one we covered yesterday. As frequently we do, 3D is a really good example of a minor gap continuation. This is an interior gap versus my preferred gap, which is a gap above the prior day's high. I preferred if this gap were up here, but hey, it still ran for us. Went all the way from 25 and change up to just under the 28 whole number. And again, always look for exits. Look for the ceiling at whole numbers, or at least what I do whenever I'm trading. I'm looking to tighten in a trailing stop as something good. Say if I buy 25.6, well, on this one, let's say you buy 20 right over the 26. Let's say you bought at 26.20. An exit target would be right under 27 for a day trade. You don't get down at 25.6, you don't get way up at 28 or something, but you get the big breakout run right over the nearest whole number above the prior day's high. So that's a good setup. And see. Anyway, it's kind of a wedge cut pattern. Then it spiked up, and that's how to trade the open range breakouts. But the most noteworthy chart of the day was obviously ANVS. We called it long for members right under 40, and it ran all the way. My exit target was, I think it was right near 50. So the trade, I think the trade setup that I preferred on this particular chart was this window, this leg of the run. Way up here, especially north of 60 and 70 and all that feels like chasing. What you want to do is get in on the first big breakout, the first big runner of the day. And you know, it was visually, it was looking extended way up at 50 and 60, and later in the day ran all the way up to nearly 100. So I don't know if anyone was trading ANVS yesterday, but this is a good example of a wide range chart that could have done it extremely well if you traded it correctly, right? 30 to 100, you could have potentially almost tripled your money, right? So easier said than done, though. I'd be happy to just take a couple of dollars out of a breakout chart like this. Now, obviously, charts with big ranges like this are completely unsuitable for both new traders and for people who are looking to swing trade because the range is too big. This could, if you're holding this overnight, I would humbly suggest that is a gamble because it could gap down to 30 or gap up to 80. And when you don't have, it's a mean reverting pattern. It ran up, it pulled back to the midpoint, but it's anyone's guess as to where it opens on Monday. I mean, it could open up here or down there. When you have that level of uncertainty, you never hold anything overnight, right? That doesn't make sense. You want to trade things that are steady uptrenders, that are slow grinders, that make sense to hold. You know, for example, 3D, I'd be okay with holding something like this overnight. Now, if we look at other high volatility charts, coin came really far down. It sold off sharply yesterday. It had been, remember the IPO was up in the 300s, in the low 400s, and now it's half that, down to 224. So cryptocurrency not having a good week, and Coinbase a good example, a poster child for the selling pressure there as well. I like SPCE a lot, and I'm going to buy this one myself over 22 because of the range. On our swing trading chart, this looks like an epic recovery play. So we'll look at SPCE, and I'll be covering that in the live room for you guys as well. For those of you live room members next week too. All right, hey everybody! Wow, a lot of comments. Yeah, some of the miners and gold stocks are doing. Let's see, SPXS go up. Who knows? Would I buy 3D again over 28? Yeah, but I don't buy right under the decade value. So I would personally, I'm going to buy it over 22, and I'll buy it again over 32. But I don't buy. Trader had asked, would I buy it over 28? Sure, but I wouldn't buy it right under 30. So I'd make it get somewhere over 30, and that's why I use the multiples of 10 approach. You know, I may go long just over 20 at 21 or 22. And my exit target would be 28 or 29. So if I can trade within that $10 round trip, the decade value between 20 and 30, that's a good round trip. And then the next decade round trip would be between 30 and 40. So I might buy over this moving average line right over 32, and that's our 100 simple moving average line. And that would be a long signal on this guy. The first long signal is just a simple price action recovery over 22. The second long signal would be north of 32. And I don't think I'd buy up at 42 or so. My play would be the mean reversion pivot play. So it's got its big beat down. The 50% retracement, best case, would be about right there. That's about half the range. Whenever you're looking for plain dips, seldom will you get the entire half the range. Oftentimes they just do little bounces. But for the ones that do recover, when they do run, they run nicely, right? Like this guy got beat down earlier from 40 all the way down to 26, and then it ran up to 64. This looks like it may be a bit oversold and maybe good for at least a few points to the upside. So that's my top pick for a recovery play, or a V-shaped recovery. A pivot play in SPCE looks to be the best one. Now, typically I'd prefer to just buy strength. So charts like this are far superior. And one thing that I would urge you from a coaching perspective, I learned this the hard way. We all have that buy low, sell high mentality, right? Or we all prefer to buy on the cheap and sell on the high price, right? It'd be great to buy at $10 and sell at 20 after it came down from 60. But what you find in actual trades most of the time is bounces and pivots don't work out the vast majority of the time. So don't have that. It's a fire sale. I'll buy it, because usually what things that are cheap for a reason, and they get sold down even further despite some intermediate small bounces along the way. So the lessons learned are focus most of your, at least I like to focus most of my energy and my trader's energy on buying new high, buy high, sell higher. And I know that's counterintuitive for some people who feel like they're paying up, but often, I mean, how would that have worked out for this? If you bought STLD, it probably looked expensive at $46 a share back in February, right? Now ran to 66 a share. So instead of trying to buy low, sell high, it's almost always smarter. 70–80% of the time at least. Occasionally get some off charts that are dead cap bounces that actually come back to life and run up. But for the most part, you want to buy good, strong directional trends that are continuously running week after week, plugging away at new highs and attracting new buyers. So, but we cover both. I'm just curious, how many of you prefer breakouts or pivots? If you would type in, if you're don't have a lot of energy, type in the letter B for breakouts, or type in the letter P for pivots, or both letters if you trade both a lot. But what's your dominant style as a trader? Do you like to trade breakouts or pivots? I'm curious. PB, PP, BB, PPB. Wow, it looks like both. Breakout. Oh, thanks, Wendy, Grand, Fred, Margaret, Jay, Damon, JF, Steve, Gary, Perry, Tom, Jim, Mira, Trey, Angela, Anjale, Wendy, Paul, Bill, Joe, Solomon. So a lot of you say both. If I've got a few dozen here. They're scrolling by. I'm trying to keep an eye on it. It looks slightly about the same with the slight edge to the pivot trader. So if I had to guess, I'd say they're scrolling by here, but if I had to eyeball it, I'd say maybe 60% of you like pivots and 40% like breakouts. So I hear you. I like playing pivots as well. But we really want to focus on, if you do play pivots, it helps to identify pivots in pre-existing uptrend. So if you see something that had run up and it pulls back and it makes, this is not quite something that looks similar to a hammer, at least a bullish lower shadow, and then it spikes back up to new highs, that's a good play. Now, one chart pattern that I cover all the time, for those of you who play pivots, I'm sorry, that's hard for me to highlight that. Look for the pattern after a drop or during a breakout where you've got a small followed by a large whole real body candle. And you may want to use as tight as the 1 or the 5 minute candle for day trades, or for swing trades on the day charts. You may have a first sign of a pivot, but you're a little skeptical. You want to see if it actually gets legs. The pattern to look for is small followed by large whole real body candle. And that's one of my favorite long-term patterns I published in Stocks and Commodities magazine on and elsewhere. Oftentimes you'll see kind of a cascade or a sequence of increasing whole real body candles. The best chart patterns, the strongest charts will often have many of those embedded in them. So if you're looking for position sizing or scaling, here's a good example. Trying to visually scan here on the fly to find good examples for you folks. You look for charts in which it's in a pre-existing uptrend is better than a pivot, but whatever you're looking for, whenever you're looking to buy something for a swing trade, make sure that it's got a setup of an increasing trend accompanied by a smaller, like small, medium, large, medium, small followed by larger whole real body candle. Even better if you have 3. On the flip side, one thing to help you avoid false breakouts is if you see a chart where, say, 3 days ago there's a large candle and a couple of days ago there's a smaller candle, and yesterday was a flat, choppy day, but you still want to trade a price breakout, that's usually a bad idea, because what you want is an increase in the range day over day. And who can tell me what indicator tells you an increasing range? Now, if you've traded as many decades as I have and as many millions of dollars worth of trades as I have, we don't need any stinking indicators. All you need is price action on the chart and the range. But for those of you who like squiggly lines and like to depend upon derivative things, which I don't, the more experience you get as a trader, it's all price and P&L management. Squiggly lines should have absolutely nothing to do with the veteran trader's decision approach. Ask any floor trader, any market maker, any specialist, any trader like myself who's been doing this for a couple of decades. You don't need squiggly lines. What you need is price action and range-based information. But yeah, you guys got it right. Thanks, Margaret, Mira, and Joe. The ATR. So if the average true range indicator is trending up, you shouldn't need that. I mean, all you need is a brain and 2 eyes. The range, the day over day range candles are getting larger, and if they are, then the ATR indicator will go up. And if they're getting smaller, the ATR indicator will go down. You shouldn't need an indicator to tell you what your eyes tell you. But anyway, be that as it may, you may find that helpful to integrate the average true range. The ATR is an Alpha Tango Romeo ATR indicator. But visually, this is a really good setup. What I'm teaching you here, the STLD. I just saw this for the first time this morning. What's neat is the patterns I teach are so repetitive and so commonly found, they're easy to spot once you know what to look for. Kind of like a hidden word puzzle. You know, remember those puzzles where you got all these letters and you got to circle hidden words and all that? That's exactly what this is. So you're looking on the right edge, right? Where's the setup where you got a small followed by a large overbody candle and an uptrend? We like to cover those for our traders in the live room, so for swing trades as well as for intraday. So, but anyway, this is a really good example, especially as it's breaking a prior resistance area. So that second whole rail body pierced previous day's resistance or previous week's resistance, and so I made for a good setup to the upside. And sure enough, it ran from 654 to 64, a $10 run using my pattern. So those are the kind of patterns that you want to be, it's obvious once you know what to look for. But if you haven't been taught, you're just flying blind, right? You don't know what to look for. So looking at the difference between the strongest breakouts in progress, we're in what I call early cycle breakouts or early portion of the breakout run and not extended like A and VS yesterday up to 100. A question from a trader, Ken, usually things break out and pull back, where's my stop? It depends on the chart, but I frequently, for my swing trades, virtually all the time, is like, let's say you're trading SPCE, for example. Let's say you're swing, well, let's pick something with a little lower volatility. What's something that's a good uptrending instrument? Well, let's say Tilray. I'm in Tilray, so let's take a look at old Tilray. Let's say you're trading the pot stock Tilray, which I am a little bit. I'll get more excited once it breaks 16 if it does. Sundial's also good, SNDL, for the under $1 stock traders. But as a swing trader, I always start to scale out at least half and usually 80% of the shares if it breaks a 2-day low. And I don't go, because just like there's false breakouts to the upside, there's also false breakdowns to the downside that can get you prematurely stopped out if your stops are too tight. So a too tight stop loss on this chart would be what? 14 for a swing trader would be 14.7, right? That's too close to the previous low. I do something like 14.50 as a stop loss, which on this chart is 70 cents under the inside market from where it closed yesterday. So if you're swing trading, and you may have seen my stocks and commodities article on the 2-day basis, you kind of got, I always obligate myself to buy 2-day high breakouts. I stand clear like this if it's inside the previous day's range, and I sell if it's under the previous day's low. So, and that's a really good barometer to help you scale in and out of your trades. And I'm constantly scaling. My routine is, in case you're curious, I'm up usually at 4 or 4:30 in the morning here in Colorado, which is 6 or 6:30 in the morning East Coast time. So I'm up several hours before the bell. And what I do is I'll pull up my current positions in the Fidelity account, and I put in sell stop orders for 70 or 80% of the shares. Let's say as long as it's 100 shares. I put sell stop 1460, 1450 for 80 out of 100 shares. I'd also put in a buy stop order, say 1570 for 80 or 100 shares if it takes out new highs in market. That's a very intelligent approach, and I encourage you to test it out. You've seen all the hundreds, well, several thousand now, testimonials I've got on my websites if you followed me for any length of time. Use that very simple approach, and I teach how to do that in the live room so that you can identify candidates of charts that are making good, strong directional trends, and also something worth trading in the first place. So, for example, OxyP kind of sold off into the close yesterday, Occidental Petroleum, but it started the day off at a 2-day high, which is encouraging. A long trigger on this chart would be over, say, 25.7, and a sell, if you're already in it for a swing trade, exit would be around 24.40, maybe 24.30. All right, so always look at the 2-day chart. I use that because you need 2 days of data. 1 day is not enough, and the more days you get, the more stale the data gets. So 2 days is the optimum, good professional approach. I scale in at a 2-day high. I hold, it's buy, hold, and sell. And you may have seen my stocks and commodities article. I have a upside down traffic signal type thing where it's green, yellow, and red. Using the previous day's high-low as the decision support tool. That's a very unambiguous, if you ever struggle with uncertainty, which we all do at times, even daily as a trader, you need to have some firm rules, some technical price action based rules. And that's a good one. That's a keeper. That's a, as a colleague Dan would say, that's a rider downer, right? get your Mont Blanc pen and you write that down. So that, and again, some instruments are suitable for day trading or swing trading. Like 3D is fine for both day and swing trading. But yesterday's ANBS would be completely horrible for swing trading because the risk is so big. Like I said, anyone holding shares overnight with ANBS is a gambler. Or you may have a problem if you're gambling because you want to have some certainty to your trades, and removing ambiguity by removing risk to the degree possible is important. This thing could gap up or down on Monday. We'll be following this in live room, and that's great. But this is a day trader's chart, not a swing trader's chart. And let me know, folks, if any questions. I know we're about out of time here. My alarm's going to go off momentarily. But you want charts with a story to tell of consistent buying for swing or day trades. Right, that's a wonderful chart, STLD, right? So lots of opportunity out there. We've got reopening plays, whether you're in value or growth or cyclicals or commodities or tech or whatever you're trading. I still think reopening plays like steel, copper, precious metals, silver and gold have been up a little bit lately. Oil's all over the place, but mostly up for quite some time. That may reverse soon, but kind of plan out or map out the industry groups and the charts that you want to follow for your trades next week. And hopefully I gave you some good food for thought in today's broadcast. So I appreciate y'all for being here. Thanks very much. And just a reminder, you can try my live room at the website at trademastery.com. Echo, stop. And join me Tuesday, Wednesday, Thursdays for the next couple of weeks. I'll try these now that I'm done with taxes and I got some time here. I can give you guys my best shots on what's worth trading in the Tuesday, Wednesday, Thursday from 3:30 to 4 in the afternoon, kind of like a closing bell format. So do register for those, and I'll see you guys in the live room next week. So thanks for being here. Appreciate it. Does that make sense? Hopefully it's some good coherent thoughts that give you some food for thought and keep you on the right side of your trades moving forward. There's so much money to be made, right? It can be really easy. I mean, I had a profitable year, but you have to know the difference between what the heck is worth trading and what's not, and how to look at your trading as though it's a sequence of position-sized entries and exits. And when things are in congestion or they cycle up and down, you often, stay clear or trade small size until there's a breakout. And I teach how to do that as well.